Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello, my name is Rob Clayton and thank you very much for joining me. Well, the first day of September was marked by another big wave of US tariffs on consumer goods made in China, which took effect on Sunday as the latest escalation of the trade war between US and China. President Trump told reporters on Sunday on the White House South Lawn after returning from Camp David they still are planned to have talks with Beijing. Trump come out and said, "We are talking to China. The meetings are in September." That hasn't changed. "We're going to win the fight," he went on to say. After roughly 110 to 112 billion worth of imported products from China are now subjected to 15% tariffs. China also retaliated on Sunday with its own tariffs plan as they roll out higher tariffs in stages of up to 75 billion in US goods like soybeans and crude oil. From a technical point, the Aussie is still not able to recover and still from this point in time remains under the break level of 67.35.45. From the break, still keeps a view towards 66.85 with the objective seen at 66.20.40. Resistance, any advances, finds resistance at 67.55 and a cap at 68 cents. The euro on Friday crushes the level of 110.20 and posts a fresh low last seen back in 2017. This on the flip side, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, broke through the level of 98.65 and which opened the gates towards the highs last seen back in April-May in 2017 and now could even see a rise up to 100.50. Now be careful here because Trump has come out on Friday and said he's not very happy with the euro being weaker and the dollar strengthening. This, in terms, could see an intervention, that is, of selling US dollars to prevent it from going up any higher. This, on the flip side, could see a break to the upside. But things are likely to be a little bit quiet for the start of this week as the US is shut for Labor Day in observance, that is, and could see a slightly quieter stage before the week kicks in when the US returns. On the day, I'm looking for support at 109.40 to be challenged with a resistance at 110.15 to cap. Well, dollar yen's backing away once again from this 106.80.90 level, still not being able to take it on or even challenge it for that matter, and we're still breaking down from a technical point. Therefore, I do believe the market is looking down towards 105.50, maybe even down towards 104.80, with the resistance still capping, as I mentioned, at 106.80.90. Sterling, disappointingly from the rejection of 122.90, 4 times that is now pressuring the support at 121.40, which was the break level. As long as we don't go under 121, that is, then I'm happy to say that the market can still stage a view to the upside and take on this challenge, which is around now at 122.50 is where the downtrend comes in. So we got a rejection from 90 and it's now lowered as we're making a descent here of 50. Now a break above there will give us some scope, that is, to 125 as in a measured move. But a close under 121 negates the bullish sentiment and instead would confirm a move towards a region of 119 or lower to 116. Gold opened very strong this morning, but didn't fail or managed to lack the momentum to continue. We do have a posted outside range day, so do be on your guard. I'm still not ruling out, at this current stage, a challenge towards 1,514. It did get to 19 on Friday, but did respond from a bullish recovery. See how the market plays in the next 24 hours. Still some risk, though, due to the fact is uncertainty now what really will come out of this decision between the US and also China in terms of the tariffs, with now both sides putting on extra tariffs. So it's a game, a political game that is, between the two sides. And we have to see how it plays out. But from a technical point, gold is a little bit from the bearish case. But with the uncertainty of the US and China, could still see demand to the safe haven side. We slipped back from $57 on Friday to the support level of $54. It is assessed, though, as long as we don't break beneath there, that I still expect to see further gains up towards $58. But a break beneath 54 would negate the bullish call and leave me neutral. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new week.